Sunday, May 9th, 2021, Maneco 64, home of alternative economics and contrarian views. So before I start, I want to wish all the moms out there a happy Mother's Day. I know in the UK it's not Mother's Day, but everywhere around the world it is, including where I was brought up and where I was born in Brazil. So this morning I did call my mother. She is in Switzerland, to wish her a happy Mother's Day. So yeah, happy Mother's Day to all the moms out there and all the moms on the live stream. So Billy is here. There you go. He's asleep as usual. Billy's getting old. He's going to be 13 in July. He was born in 2008. He's the credit crunch puppy. That's how we know him. We got a very good deal with Billy, the breeder. Yeah, he wasn't in good shape financially, and he needed to. Billy was the last puppy he had, and the bills were racking up, and we got Billy for a very good deal. He was worth all his weight in silver and gold, I'd have to say. So the weather's getting a lot nicer. Today was a relatively warm day here for England. I did play golf today. I played the first big competition this year. I didn't play very well the first 9, but I played well in the second 9. So yeah, it was kind of a game of two halves. So there you go. And then later on this afternoon, my wife and I, well, my wife did most of the cooking, but we had a nice roast leg of lamb for lunch. So that was a good Sunday. So I see there's a lot of you here already. I saw someone, Larry Ferris, commented way before the live stream started. He thanked me for recommending Fiat Money Inflation in France by Andrew Dixon White. He says, very enlightening, 20 years in chains and guillotine, ought to be considered once again. One thing I wanted to say about Andrew Dixon White, that book was written, I think, in 1912 or something like that. He was one of the founding fathers of Cornell University in New York. And interestingly, he was a Yale graduate. And guess what club he belonged to, or secret society? Skull and Bones. Am I saying I agree with Skull and Bones? No, but be as it may, he wrote a really good book, and he was Skull and Bones. So there you go. Din Jokhanas, hi Din, nice to see you. Din is in Malaysia. Wen Moon, Cow Lister. I guess you're talking about gold and silver. Well, I think we're pretty close to breaking out. We were able to break out that 1800 level last week. And as I said, it was going to trigger a lot of stops, and it did. Andrew Howard from Bristol, thank you for those kind words. PGG from Pierre in Ottawa, Canada. Chris Gonman from Atlanta. 322, yeah, that's the Skull and Bones number. It's funny because the house I grew up in Brazil, and my dad was not Skull and Bones. He wasn't into secret societies or Masons, but the number of our house is 322, the house I grew up in Brazil. Coincidence, I think. So let's see how many people. We still got a minute, 264 people already. We got a minute to the official start. I always try to come live a little bit early. It looks like I'm not looking at the camera, but I'm looking at the chat box. That's why my head is turned. I like to try to get your comments and answer as many questions as possible. Gavin Hillebold says water is the new liquid gold. Yeah, well, water is always going to be important, but the thing about water, I think the water is always abundant. I think it's just how we treat water that's important, and where we choose to live. We've got Donald Best here from California, and I'm not having a go at California, but LA, that area there where Los Angeles is not a great place to live in terms of getting water. So you have to bring it from the mountains through pipelines, and yeah, not the best place to live in terms of water. It's the same thing with Florida and some other states. Not the best place to live if you want to avoid hurricanes. So I actually think, yeah, there is plenty of water out there. It's always uh, evaporating and coming back. So, and it's actually the same thing with oil. And we're going to talk about oil today, and gasoline, and other products in relation to this pipeline that's been closed down for a while because of the supposed hack. And I'm going to touch into that and look at the Energy Non-Crisis book by Lindsay Williams. I think it's really relevant. So now let's start first with the oh, okay. I hadn't been scrolling the chat. Let's start with the title of the live stream. I mean, I try to come up with a title for the live stream, but it doesn't mean to say that we're going to cover it the whole time on the live stream, but we are going to look at it. So it's J. Powell credit bubble at extreme levels. So I read a really interesting article on a blog that I actually found through 321gold.com. And the blog is called The Felder Report. Some of you might have heard of the Felder Report. I have looked at this Felder Report for quite a few years, but I haven't looked at it recently. And so he's written something recently, Take a Bow, J. Powell. So I thought it was really interesting. It's not very long. We can go through it. And I think it's quite concerning. By the way, this is water, and I've got my Tassie Tasmanian Devil mug. I've had this for a long time. He's one of my favorite characters, Tassie. So he's looking at the Buffett yardstick. I guess that's Warren Buffett, which is total market capitalization of U.S. equity market relative to overall size of the economy. So he uses GNP. That's the same thing as GDP, basically. And he says that it stands at a gaudy 270% of GNP. So if we scroll down and look at reference, the peak of the dot-com mania, this measure reached 188%. So here we go. There's the dot-com mania. So we're now over 40% more expensive than the most expensive stock market peak in history. Another way to think about this is to understand that at today's valuation, the stock market would need to fall 30% overnight in order to match the peak of what is widely considered the greatest bubble in more modern history. So there you go. There's the chart. There's another measurement here. S&P 500 valuation is another measure. As you can see, it's really overvalued. So this is the median price to sales ratio. And then there's another one, number of components trading more than 10 times sales. So it's all really bubbly. And to be honest, I think it can continue. And why do I? Okay, we got a super chat. Low blood pressure, low blood pressure. Low blood pressure came on the Mike and Mario show. I'm doing a show now every Friday around noon Eastern time with Mike from Rethinking the Dollar. It's about 30-40 minutes. Our first Mike and Mario show, so to speak, lasted a little longer, and low blood pressure made a call on the live stream. So he says, do you think Daniela Camboni is a hottie? Carboni, I think it's Camboni, isn't it? Well, she's a beautiful lady, yeah, but she's married now. She's got twins. So yeah, she's quite attractive, I would say. I agree with you. Or I don't agree with you. It's what I think. I don't know what you think, but anyway. So yeah. So back to more serious things about the markets and the bubble. Yeah, I think it can keep going because I truly think we're going into uh, a world that we've never seen before, at least in our lifetimes. Maybe, someone in Germany, their grandparents and great grandparents went through it in 1920, 1923. Or some people in Venezuela went through it. I guess in Brazil, I went through it, but it was kind of isolated. It wasn't the whole world. So why do I say that? Well, because I think they're going to keep inflating. And I'll just show you another chart. You've seen this one before. Um, this is the CRB index. So this is the top of the CRB index here on the top left-hand side in 2008. So we got up to almost 500. And now we're not even at 250. But we've broken out some key levels. So there's still a lot of room on the upside. And we know the economies are not doing well in the States, in the UK, or anywhere else. Of course, the powers that be, the mainstream media, politicians are going to keep saying, wow, the UK had the best recovery in 70 years, but they won't tell you that last year the UK had the worst recession or depression in 300 years. So things are not good. But how come commodity prices are going up? People are going to be puzzled, especially the Keynesians, the mainstream economists, because they think that you only get rising prices or what they call inflation when the economy is strong. But I think we're getting the loss of confidence kind of debasement. And this is pointing to that. And I think we are probably in the second inning of the bull market in commodities, or the bear market in fiat currencies. So that's why I think also the stock market could keep going up, not because things are fine, but because the currencies are just being trashed completely. So it's like asking someone to price the Dow in confetti, or the price the Dow, I don't know, in Billy's chewed bones. It's not going to be worth that much. So there you go. Dmitry Shmerkovich, thank you for your super chat. Do you think there is a dollar index threshold at which Fed will raise rates to defend the dollar? Also, how important is 10 share price threshold is for SPACs? Are SPAC prices falling below implied death spiral? So two questions. First, the dollar index. No, I don't think the Fed will raise rates to defend the dollar. The dollar, the dollar index doesn't look good. They're not going to raise rates. So expect a lot more weakness. But don't forget, the best hedge for the dollar falling is not the euro or the yen or the pound or the Aussie dollar. It's commodities. It's especially gold and silver. SPACs, actually, I read a long article in the FT about a week ago. So good thing, because now I can talk to you about it. Yes, SPACs are basically a way to avoid IPO rules. And yeah, the $10 I think level is really important, because SPAC is basically like a funding company, a special purpose acquisition company. And what they do is they circumvent the IPO rules. And one of the things they do is that they price takeover. The takeover is the company that's going public, or being taken over, and they price it over $10. And I think there are rules about declaring who invested in it if it goes below $10, right? So yes, it could be a problem. Yeah, and it's a huge bubble, the SPACs. It's another symptom of the J. Powell bubble, because even the big mutual funds like BlackRock and everything, I think they put like $140 billion into these SPACs last year. It's totally crazy, really. So yeah, I think look for SPACs to maybe signal a death spiral, but don't forget the Fed could come in again and throw the more sinks, more kitchen sinks and stuff at the system. And all that's going to do, it's going to create an even bigger bubble. It's going to create more and more debasement of the currency. And that's why I think you need to hold on to gold and silver. And I know it's been frustrating the last 9 months or so of holding gold and silver, but I think it will be worth it. And it's, you need to think of it as protecting your savings. And with that, I just wanted to show you that the stock market during the Weimar Republic, hyperinflation in Germany in 1923, did quite well as well. But the currency kind of collapsed. So that's what we need to look at, to think. Let's share this first. Where is it? Have I got that? Can you see that? Okay, hold on. Okay, I thought I was sharing. There we go. Here's what happened to stocks during German hyperinflation. This is from Business Insider, November 2011. So there you go. On the left-hand side here, you can see that the German stock market in 1920 was below 1,000. And then by the end of the hyperinflation, in the end of 1923, it reached like what's that, 100 billion marks. I mean, and look at what the dollar did as well versus the German mark. Well, this is how the stock market did in dollars. So yeah, it's all like a fake really. I expect, so the dollar was as good as gold back then, 1923. It was $20.67 per ounce. So it did just as well in gold. Gold went up as well. But I think this time around, and not all the companies there in the German stock market did well. I would say a lot of the financial companies, insurance companies, investment trusts, and they didn't do well. But industrial and hard asset companies probably did well. So that's what happened, and that's why I think anything's possible with the stock market, really. And yeah, these bubbles are getting crazy. Chris Conman, thank you for your super chat. What will happen to the fractional reserve banking system after the US dollar collapses? Well, it's going to start up again, unfortunately, I think. Even though I've got a book in my shelf written by the former governor of the Bank of England, Mervyn King. It's called Modern Alchemy. I could have brought it out today, but I didn't. And he talks about the '08 crisis. And he says one of the options that we have, or the bankers have, the powers that be have, is to go back to 100% reserve banking. And I think back in the early 30s, there was talk of that. The Chicago School proposed that, because you could have what you call deposit banking, where you have 100% backing. It's like Glint, for example. That's 100% gold backed. It's not a bank per per se, technically, but that's how it should be. You put your bank for safekeeping, and it's kept there. Your money's kept there 100%. So people might ask, what happens to credit? How are people going to borrow money? How are companies going to finance uh, activities or new startups? Well, you do it through an investment bank, and you do it through, yeah, and the private sector. People will risk their money, through equity financing of banks. So that's why the Glass-Steagall rules were so important, and that's why I was ashamed that they did away with Glass-Steagall back in 1999, because what that did is that how can I say, it allowed uh, commercial banks to get involved in investment banking. And even before that, though, even during Glass-Steagall rules, though, the commercial banks did use fractional reserve. Yeah, I would say that there needs to be, because it's not going against a free market, it's going against fraud, I think, because if I deposit, I've got here 5 silver shillings, and I deposit that in the bank, and my understanding is that the bank is going to safe keep that money in there and not lend it. They shouldn't. So yeah, I think it should be a big part of it. I answered your question saying that it will start again. I hope it doesn't, but it's incumbent upon us as the general public to learn about these things and to be aware of it. We need to educate ourselves in banking and money so we can uh, hopefully put the people, uh, the right people in power that would implement these kinds of rules. Because if we don't, the bankers are still going to be in control. So that's what I have to say about that. I just have a sip of water. Helsinki. You had Brax on a few days ago, and he mentioned reindexing of loans after hyperinflation is over. Can you please elaborate on this? Yeah, the Germans did that. The German bankers did that after the hyperinflation. So basically, what they will do, I think in Weimar, they came up with a Rentenmark after the collapse during 1923. And what they did, yeah, they basically valued the loans at the. They used the gold value of the loans prior to the hyperinflation to revalue. Let's say right now the average mortgage in the UK, uh, let's say 10, is like 50 ounces of gold. You take 50 times 1,300 pounds, and you get like 80,000 pounds. Let's say that's the average mortgage. So they could do that. They could index it to a stable store of value, and that would probably be gold. So yeah, don't think that just because you have some debt now, and that you think we're going to get the hyperinflation, that all will be hunky-dory, your debts will be written off. No, the bankers usually have a long memory in terms of what people owe them, so they will have their weight in gold, so to speak. They will have their flat, your I think it was the Merchant of Venice, take the flesh payment in flesh or something like that. I forgot the term. SK, thank you for your super chat. On Google News, now there's an article by FX Empire, gold price hyperinflation. That is absolute BS propaganda. Gold price hyperinflation. Well, in a hyperinflation, the fiat currency collapses. So yeah, it looks like gold hyperinflates, but it's the currency that hyperinflates. So I think that's what you mean. Celtic knots. The Irish flag is green at the hoist, then white and orange, symbolizing lasting peace between Protestants and the Catholics. Super Seamster, thank you for your super chat. Happy Mother's Day to your family. M64 Stack, and thank you. Oh, thank you. Same to you. Yeah, I said at the beginning of the live stream, it's Mother's Day everywhere around the world, at least Western Europe, North America, South America, but not in the UK. The English like doing things differently. They drive on the other side of the road. They and Mother's Day, I think, is in March here, I think, or April. What else is there? What else did I want to talk about? Oh yeah, I wanted to recommend you guys watch, if you got the time. It's not a long video. It's from a guy I've interviewed already on this channel, Paul, from his YouTube channel. I highly recommend it. It's Ballon GP, and he talks about how to choose your money carefully, and he talks about if you're someone who just started working in 1971 and you kept your you kept your dollars in the bank or under the mattress. You see the cashier, the red line. That's what you'd have today, $41. He said he was talking about $41. If you put it on a bank deposit, yes, it's almost 500. But if you put it in gold, it's now like 1,800, because I think the ounce of gold at the time was $41. So, and then that's that line there is the growth of the currency. Yes, the price of gold has ups and downs, but it's been, for the last 50 years, the best place to put your hard-earned cash. So I recommend that video. Yeah, check out Ballon GP. I'm going to put the link to this video in the chat here. So that's the other thing I wanted to tell you guys about. Lord Humongous, Bill Gates. Yeah, Bill Gates. Yeah, divorce. Pretty big news, I guess. I saw a story. I think it was on Zero Hedge about the fact that he was friends with Mr. Epstein, and that Mrs. Gates was not very comfortable with that relationship. So who knows? Whole Bitcoin margin call movie. I've watched it before. So you want me to review it? I have to do that later. I don't remember it off the top of my head. Why with Africa? Bellin GP has amazing info. Yeah, he's good. The premiums aren't fair. Let me go over a little bit about the silver premiums, because I spoke to Oliver Temple last year about the premiums, especially silver. And why are the premiums so high on silver? Well, because, 1 ounce of silver is the same weight as an ounce of gold, but you get, the refiners and the mints. It's pretty much the same price to mint a silver coin than it is a gold coin. But when you sell a gold coin, you're getting a lot more. You're getting 70 times more in terms of fiat. And when you're selling the silver coin, you're getting 70 times less. So, of course, the premium is going to be a lot higher percentage-wise for silver. And the reason they charge the premium is because they need to make a living. If they refined the silver, minted the coins, and then sold it to a wholesaler and then a retailer, and they kept it at the spot price, we wouldn't have any silver around, because they wouldn't survive. So I think the only way the premiums are going to go away, especially in silver, is And there's the only way that is possible is for the prices to rise a lot more. Price of silver should be at least $50, maybe 100, in order to make the premiums fair, because it costs a lot more than it did 20, 30 years ago to make a silver coin. Gold, yes, it costs more, but the price of gold has gone up, so the premium is a lot lower. So yeah, all you can do is try to get the best deal possible, and maybe do private deals with people you know. Then you can get around the premium. Oh, so let's look at the big story. And I have to say, a lot of you guys probably subscribe to Greg Manarino, I would say. And I watched his video this afternoon, Greg Manarino, and he thinks that what's happening with this Colonial Pipeline is a false flag, and I have to agree with him. Actually, I think they're trying to create disruptions in the market for fuel, for energy. They want to see prices rise so they can blame the rising prices, which is the consequence of inflation. And who creates the inflation? Well, it's government and the Federal Reserve. They're the only ones responsible for inflation. So they want to create like these crises to take the attention away from the fact that they're creating inflation. And I think that's what's happening. So you see here, fuel markets brace for volatility after cyber strike shuts US pipeline. So I won't go through the whole article. I've read it. Basically, they're saying uh, unless it's solved fairly quickly, we could see things get worse in terms of gasoline prices in the US and other like diesel prices and other things. It could eventually affect oil prices, crude oil prices as well. And it's weird because this book here, and I highly recommend it if you can find it. It's probably not easy to find, and it's probably pretty expensive. The Energy Non-Crisis by Pastor Lindsay Williams. And this is about the 1970s so-called oil embargo crisis, where we blame the Arabs and the 7-Day War, I think it was, between the Arabs and the Israelis for rising prices. But it's funny. You could be talking about what's going on now. They're telling us that it's because of a hack they have to shut down this Colonial Pipeline. And this Colonial Pipeline is very important. It provides a lot of energy to the whole eastern seaboard. It comes from Texas. I think about 15% of the U.S. energy supply comes through there. But look at what happened in the 70s. Let's see, shut down that pipeline. So before I read this book, I always thought that the reason why there was rising oil prices in the 70s, and we felt it even in Brazil, rising oil prices, rising prices of everything. And even in Brazil, the oil company in Brazil, Petrobras, the state oil company, they even went into the sugarcane business, and they developed cars, fuel for cars to run on alcohol, sugarcane alcohol, and it was quite successful. I remember that, and that was a consequence of this non-crisis. And I never knew that the U.S. government told the federal government told pipelines, oil companies that used to transport oil from the west coast of the U.S. to the east. Basically pipelines like this. Now they told them to shut it down, and the rancher who met Lindsay Williams, because the pipeline went through this rancher's. I think it was in Wyoming or Montana. The pipeline went through his ranch, and He knew he knew that the government told the oil companies to shut down the the oil, and the reason he knew is because he used to get paid for allowing the oil to flow through the pipeline through his property. So yeah, so I believe they're trying to disrupt the energy market. We have to see what happens this week to gasoline prices, diesel prices, and it could spill over into crude oil prices. And I think even if they solve this problem right away, it could hang over other, it could be something that people are going to be focusing on, and it could start putting a premium, a much bigger premium on energy prices. So we need to keep an eye on that. Not Joe King. Didn't Bezos dump a few billion in stock? Well, I think he did that last year, just before the pandemic and the whole lockdown fiasco. I think it was February last year. He sold like $6 billion worth of Amazon stock, if I remember correctly. I don't know if he's done it recently. Super Seamster says you can get the Energy Non-Crisis for $10 on Amazon. I recommend the book. I like Lindsay Williams. He hasn't been around lately. I haven't heard him for a few years now. Lindsay Williams. I don't know what happened to him. Uh, Super Seamster has another question. Do you think it is worth swapping some silver for gold with gold to silver ratio so close? No, I still think it's still, I would be doing the opposite right now, swapping gold for silver. If you were going to do that, I'm not doing it myself. But looking at the gold silver ratio recently, I think we're starting another leg down, which means silver is going to continue to outperform. Dimitri, thank you again for your super chat. If they revalue gold, will they revalue silver? Yeah, I think it's being done already, Dimitri. They've been doing it since the beginning of this century. Um, I personally don't think they're gonna do it over a weekend. Like we wake up tomorrow and gold's at revalued up to, it's 5,000 bid, and they keep it there. Um, even though I wouldn't mind if that would happen. But yeah, of course, I think those other precious metals would follow. They would follow, yeah, even if they weren't directly involved in the revaluation. Uh, Black silver, people think Reddit Wall Street silver is causing the squeeze, but we know it ain't true. Yeah, it's difficult to say. I think there's definitely more awareness in the general public about silver since February. Wall Street bets, Wall Street silver. But like you said, I think there's more to it than that. I think there's a lot of big money buying silver as well. Not just physical gold, but also silver, and I think that's what's happening. But I think it's making a difference, though. There is a lot of small investors buying silver, and even if you can only buy a few ounces a month, if you multiply by that by 100, 200, or 300, or even a million people, it makes a difference. So yeah. Uh, Tara, thank you for your super chat. You're welcome, and thank you for your comments. Okay, so I just wanted to show you. I worked. Some of you might know I worked in the city. I worked for a few banks, brokers, but I worked for Citibank for 2 years. Why 2 years? Well, because they sold our futures department to ABN AMRO Bank, a Dutch bank. But this is the only thing I have left from Citibank. They gave that to us to put on our desks. So it's actually quite nice. It's the only nice thing I've gotten from a banker. So I still have it. It's quite solid. It's got my name on it. Just wanted to show you that. Anyway, Jamari Mitchell, the world is Venezuela. Yeah, you're right. The Crimex is going down. Spare a dime. I agree. I hope so. I think it's going to become irrelevant if we keep, the public, the general investment public, but also, the big funds. Hopefully, the family offices, they start buying real silver and gold and stop buying the the empty promises, which is all the ETFs or unallocated interbank gold. I know someone actually who I worked with in the city, and I'm still in touch with him, and he's quite a wealthy individual, his family, and he just told me, oh, I bought some gold. And I said, oh, good. And I said to him, make sure you buy physical. And he said, no, I did it with my bank. I'm JP Morgan. And I said, well, you got to be careful. And then the next time I spoke to him, he actually told me that he borrowed on the back of one of his bond holdings to buy the gold. So that's crazy. People need to really wake up, and hopefully, I think he will learn the hard way, though. And I keep telling him, you got to buy physical. Thoughts on copper? Well, I've been following, the commodities since the fall of last year. We following that chart that I just showed, and I'm bullish in commodities and copper, especially. We just broke out of the all-time high that we made in 2011, around 466 high-grade copper. I think we closed around 474. Yeah, copper is going to go a lot higher. Copper is an indicator of prices of inflation. It's a symptom that the dollar is not very good. And yes, and I think the all the stimulus is, of course, seeping into the consumer in the States. They're buying a lot of stuff for not working, but there's someone benefiting from that, and that's China and the major, producing countries that sell everything to the US. And to produce things, they need to buy raw materials like copper. So yeah, copper is looking good. And I expect silver to follow suit because they're both fairly closely related, copper and silver. Yeah, pre 1980 pennies have copper. So you can get, I think it's worth a lot more than a penny if you can get them. And nickels as well are above face value. Miles, thank you for your super chat. During Ghana Empire stretching throughout Africa, copper to gold ratio was 1 to 3. So you needed 3 ounces of gold for 1 ounce of copper. Wow. What conditions could bring that back? Hmm. I don't know, to be honest. Maybe technology. I know Goldman Sachs was talking about how copper could become really important, but I think that was a little bit disingenuous from Goldman Sachs because they're trying to detract attention from silver. So not really sure what could bring that back, that kind of ratio, 1 to 3 versus gold. But it's an interesting piece of information. Silver may be declared a strategic asset. You could be right there, Alan Zibelman. And I saw uh, about a week ago, I read an article here in the Telegraph in the UK that the UK government now is trying to look at strategic metals, especially rare earth metals. And because the Chinese have been the only ones who have bothered to explore and extract rare earths, so the West is behind the curve there, and the same thing for silver. So yeah, they could declare it strategic, and it would put a rocket up silver prices even more. Well, it's not really. There's not much of a rocket right now, but I think it would really yeah, help the price. Mr. Ashford, inflation as a searched word worldwide has broken out from its 2-year high on Google Trends. It's shooting up in the US. Perhaps people are educating themselves on furlough. You're right, and that's a problem for the Federal Reserve, because they always talk about keeping inflation expectations under control. You see, because it's a psychological thing as well. Because basically, inflation is when people lose confidence in the currency and the demand for the currency goes down. So, what does that mean? Well, every time they get paid, or they have dollars or pounds, they want to get rid of it. There's no, they want to swap it for something real, because they can see that it's not, the currencies continue to lose value. So yeah, they're probably not really comfortable with that kind of information, the Federal Reserve, and I think they're going to get even more uncomfortable as time goes by. Buzz Crowley, thank you for your super chat. Can we expect fireworks on June 28th, Basel 3? No, I don't think so. I'm not saying it's not important. The fact that gold will be considered a credit free, uh, what is it? Risk-free credit asset for tier one capital. I don't think it's going to make a difference overnight like that. Yeah, gold could go up on June 28th, and it could be a little because of that. But markets have a habit of pricing things in way in advance. So that kind of information is probably already priced into the market. And that doesn't mean I don't think gold prices are not going to continue to go up, uh, because yeah, you shouldn't really focus too much on these Basel rules. I think the most important reason for gold and silver prices going up is all the money printing and you know the inflation. And by inflation, I mean the inflation that we've had, because what we're getting now is not inflation. What we're getting now is the consequence of inflation. It's rising prices. um, yeah, they've been able to tinker with the measures of prices. They've been able to keep the inflation or the easy money flowing into assets instead of consumer goods. But now I think they're losing the war. Richard, thank you for your super chat. Richard says U.S. debt clock very close to smashing 50. I think you mean 50 trillion. Yeah, you're missing a few zeros. Yeah, I know it's around 49 trillion by 2025. I'd say 100 trillion could be more accurate. What do you think? Um, yeah, Richard, it's trillion, not billion, but anyway, I think 100 trillion, I'm not sure, but 60 or 75 quite easily, especially if we get another crisis like we did last year, where they have to come out with even more stimulus, monetary and fiscal. Lily Robin, pre-65 coins called junk or constitutional silver. That's right. Here in the UK, Pre 47 is 50% silver. Pre 1920 is 925 silver. I've got uh, I've got a few books here because some of you asked me to do videos on books I recommend. There's one that actually one of the viewers of this channel recommended to me. I think it was about a couple of years ago, and it's a really good book. It's a bit of a dystopian story. It's fiction, but I think you guys would like it because it's very it's creepy because it has some how can I say it feels a little bit like what's happening now in the last 14 months, the crisis, even though Lionel Shriver, the author, it's a woman. uh, it's a man's name, but it's a lady, Lionel Shriver. She's an American living in London. She wrote this book, The Mandibles, and she wrote it before the crisis. So, and I don't think she had a pre-knowledge or anything, but it's really interesting, and I think you guys will like this book, The Mandibles. Billy is coughing. I don't know what's wrong with him. He's getting old. Uh, Super Seamster, they say the derivatives take it up to over 200 trillion. I don't think it's the derivatives that take the national debt. I think what you mean there is the unfunded liabilities like Social Security and Medicare. Derivatives are a different thing than the debt. Derivatives are bets that mostly banks and hedge funds have, and I think the notional amount of derivatives is over 1,000 trillion, which is like a quadrillion. Billy, you all right? He's he's coughing. Anyway, Mary should open a library. Yeah, I do have a few books. I've got a few more here. Let's see. Oh, one that I'm reading right now is this one here. God's Bankers, A History of Money and Power at the Vatican. I highly, it's quite thick, but I think a third of it is just footnotes. So it's not really that big. As you can see here, the rest is footnotes. And really interesting, really interesting. It talks about how the Vatican was involved. You know, I'm at the part just after World War II, but they were heavily involved with the central banks, the Vatican. They opened their own central bank in 1942 in order to hide what they're doing from the Allies. They dealt a lot with the Bank for International Settlements. Um, they helped launder a lot of money from Eastern Europe that the Axis powers, especially Germany, stole from the Jews. Life insurance policies. It's really something eye-opening to read this book, and it just goes to show that these people are still around. The Vatican, the central bankers, they're all working together. I don't think it's changed. And they're part of the World Economic Forum crowd, I would say. So yeah, the author is Gerald Posner. There you go. I think I'm on page, let's see. I'm on page 120, so I still have a bit to go. Chris Conman, thank you for your super chat. The Uneducated Economist gave you a shout out on one of his latest videos last week. Yeah, my wife actually found him a few years ago, and yeah, she likes watching him. I like watching him sometimes, and I mentioned him a few times on the videos that he made about lumber, the Uneducated Economist. He's got, I think he's got over 50,000 subscribers, which is more than I have. I think I'm up to almost 48 right now. Maybe I should have him on the channel, or I'll have try to contact him, have a chat with him. That would be good to have an interview with him. Frogsy says he should look into inclusive capitalism YouTube channel. Rochelle Fernandez says your book recommendations are absolutely stellar. Keep it going. I've made my daughter listen to you. Read the section from the fiat currency inflation book in France. Thank you. Jack Nichols, Roberto Calvi. Yeah, it's one of the reasons why I bought this book. I think they will cover him. Roberto, they talk about him in the beginning of the book, but that was just like an introduction. Roberto Calvi, he worked from the biggest banks in Italy in the early '80s, Ambrosiano, and he was found hanging from Blackfriars Bridge in London. Yeah, and I don't think it was suicide. Yeah, there's a lot going on there, but I haven't gotten to that part yet. Clark Torres says, uneducated is economist, a fan of yours, Mario. Yeah, I'm a fan of his as well. So maybe we should do a collaboration. Uh, Alan Zibelman, work hard and save. Yeah, work hard, but and save. I think that's important. But also, you have to try to enjoy things as well. It's a balance. Uh, Joe Cletus Hasso Screech, did you know that Stanley Kubrick was a gold bug? No, I didn't, but I've I've read and listened to a lot of stories about Stanley Kubrick, uh, and I think he knew quite a bit about what's been going on in the world. I think he died quite early. I think Alex Jones spoke a lot about him, Stanley Kubrick, and Eyes Wide Shut. He produced that movie, and some people think that's one of the. It was kind of a film about the Rothschilds, like a hidden message, and that's why he, you know. So yeah, I didn't know he was a gold bug though. Yeah, Lily Robin. We're going to be doing that show every Friday. Yeah, it suits me and it suits Mike. It's around 5 p.m. here on a Friday. Mike from Rethinking the Dollar. Super Seamster says we never went to the moon. Uh, I tend to agree with that. That's something I don't bring up too much, but I definitely think, if we could go to the moon so easily back in 1970 or 69, why can't we do it now? 50 years later, we should be, we should have like resorts on the moon. We should have golf courses on the moon. And we haven't been back. How come? Siddharth Sri Kamal, thank you for your super chat. Would you hold off buying real estate now, generally in the US, or just get on it with low interest rates and hope inflation keeps the prices high? Well, it depends, what kind of um, purchase you're looking to do. If you're looking to buy with cash, with no mortgage, with no debt, I think it's always good to buy, real estate. The wealthiest families in the world that have been around for hundreds of years, like in Europe, they have a lot of land and real estate, but speculation in real estate, that's a different story. It's dangerous. I wouldn't leverage too much. I know interest rates are very low, relatively low in the US, but they could go up very quickly. Yeah, you could have a scenario like in 08, 09, and you could be in trouble. But if you have the wherewithal to be a cash buyer, I think it's always nice to have a property. Um, yeah, if that floats your boat. It's a hard asset. It's something that will always hold its value. But of course, in a bubble, things always do that. You just have to make sure that you can keep going through all the bubbles longer term. BC Hanses, space may be the final frontier, but it's made in a Hollywood basement. Silver Highwayman, we can't afford to go back to the moon because of inflation. I thought we could just print the money to go there. You just maybe buy some Dogecoin and that will help you go to the moon. Deflation. Deflation is when the supply of money and credit shrinks, and that results in lower prices of general goods. But if you look at the Fed's balance sheet, if you look at M1, M2, M3, the national debt, it's been a one-way street for the last 50 years. Yes, there's during recessions and crises, there's small blips, but they never let it happen, the deflation, because they keep pumping, the funny money. One day, of course, after the hyperinflation, everything will implode, and then you're going to have a horrible deflation. But you're not going to get the deflation before the hyperinflation, I don't think. Some people seem to think that we're going to see a deflation, and deflation is not lower prices. Deflation is just like the opposite of inflation. It's the destruction of money and credit, while inflation is the creation of funny money and credit out of thin air. Super Seamster says you're seriously on it. You know what the truth is. Well, the truth is out there, Super Seamster. I think I've seen that, not joking, Hidden Secrets of Money. Isn't it with forgot his name now, the guy with the glasses? It's a pretty old documentary. Thank you, Bart, for your super chat. Got a few minutes to go. Fast Eddie says homes are a liability. You need to be mobile in these biblical times. Well, I don't know about that, because we can't really move that much here in the UK still. They've got a lot of rules and regulations, but I know what you mean. Oh, is that Mike Maloney, The Secrets of Money? Yeah, I've seen that years ago. It's good. Lord Humongous Baloney Pony, Bo Pony. Pino Kunchner. What happens to the gold price if there's no inflation anymore? Well, um, if there's no inflation, then the money supply just stays constant. I would expect gold price to stay constant. The problem is uh, the system we have, a fiat currency system, is based on debt, and debt is inflation. And the only way to keep it going, to pay off the old debt, is to issue even more debt. So if they stop inflating, the whole system implodes, and you're going to get a lot of bankruptcies, a lot of companies and individuals failing. And even then, you want to have gold, because if all the banks are collapsing and all the companies are collapsing, gold has no counterparty risk. So I wouldn't be too concerned about the gold price, even if they stop inflating. Bart, what made silver jump last summer? Can we see it again? Yeah, I definitely think we can see it, and we're close to seeing it. What made silver jump? It was a lot of physical demand for silver. That's what made it jump, and all the new stimulus that they put out after the crash we had in March, all the trillions of dollars in new uh, central bank created funny money, and all the fiscal stimulus from governments all around the world. So there you go, guys. Thank you for being here. Yeah, I enjoyed this live stream tonight. And if any of you are new to the channel, if this was your first time, think about subscribing to the channel. I make a video every day. I make the live stream every night, London time at 9. And yeah, thank you again. Have a great rest of the weekend. And I'll talk to you tomorrow.